Good morning, everyone. I'm going to do a quick update. This is going to be on an intraday basis only because I didn't think that we're going to be breaking downtrends like we are. I'm sorry, uptrends like we are right now. So I'm going to go ahead and make this update intraday, and we may I may have to do another one after the market closes. So right now I'm going to start with the SPY, which is the the S&P 500 ETF. And what I've shown you before, this is daily chart. And what I've shown you before was the SPY, or the market, as far as the large cap goes. It's been in this uptrend channel, and every time we were starting to see some divergence because it was creating a this uptrend line, or uptrend, yeah, I guess you can say uptrend line, that was diverging from the actual uptrend channel. Now you can also see what's been going on with the moving averages, which has been making lower highs. Okay, I apologize about that. I had a phone call in the middle of my update. So, but anyway, where was I at? Yes, the uptrend, um, the the price have been making going higher, while the moving averages have been diverging away from the new highs of price. Do, does not coincide with it. With the moving averages, because the moving averages of the MACD have been making lower highs. So there's a divergence there. Um, Also, I guess you could say that um, the volume has been contracting some, and you will see also periods of distribution, like right here, with um, the actual selling pressure, the selling volume is picks up, and that's also another sign of distribution. Um, Now you're starting to see some of the divergence on the shorter term um, oscillators, like the stochastic, and and the one that I'm really concerned now about is the channel that it looks like it's starting to break. Okay, and sometimes the channels may be a little bit more of a subjective, where you start your channel and what points you pick. But uh, in this time, I I agree with this channel more because of that it follows the moving averages um, very closely. So we'll still have to see what happens by the end of the day, or by the end of the week, which, like I said before, it is the closing of the quarter, the first quarter of 2012. Um, Also, let's look at what's going on in the IWM. The IWM is the ETF for the Russell 2000. So you got small caps, small capitalized companies. Um, and this ETF follows the Russell 2000, which means that it's 2000 of the small caps. So, like I've showed you before, again, the small caps are in a wider uptrend channel, but still an uptrend channel. And the uptrend channel, it is wider because the small caps tend to fluctuate a little bit more, since they're easier to, um, I guess, manipulate in the ranges. Um, it takes less, um, I guess I should say less money, less to be less money to have the small capitalized companies, uh, their stocks just move, which should make sense. I hope it does. Nonetheless, this channel looks like is it will be breaking by the end of the week, um, and this is concerning because the divergence on the MACD is way more prominent um, than the large caps, which means that the way down will be um, a little more volatile, a little more of a whoosh down, I guess, um, if if you can say that. Let's look and also let's look at what's going on in the weekly, because in the actual weekly chart is quite interesting, and this is why. On the weekly channel, you have this down trend line. Let me go ahead and highlight it. Okay, the one that I just highlighted right here. Um, and this downtrend line, it seemed like he was starting uh, the the Russell 2000 was starting to break through it. Um, Now there's a couple of things about the actual break of this downtrend line. Usually, when it breaks through downtrend lines, you'll look you'll be looking at a higher volume because you're breaking through a downtrend that has been going on for quite some time. Now, we didn't get that the first week. That let's look at it a little bit more closely and activate this again. We didn't see that the first week that we were starting to poke through this downtrend line. Um, a matter of fact, was contracting volume. The second week, again, we had um, rejection of price, which was even more concerning, and that was also with a little bit higher volume. Now it broke through and it completely reversed. That is definitely a concerning a flag, a concerning sign, a flag saying that this is not going to hold. So I am looking for this Russell 2000 according to the I think I did a Fibonacci retracement before. Let's do that again real quick. Um, and here we go. Um, well, this is it will be more of a push down on the small caps. So I would think that it will head down to the 38% retracement. It may take a couple weeks, which will also coincide with the what's going on um, in the reporting. The first couple weeks of uh, of April, you got the reporting of the quarter for companies. So uh, I don't see it going to the 50% retracement, but you never know. We'll see how next week starts. But definitely, I do see the 38% retracement hitting, and you have quite a bit of support in that area. You see here, there, there again, and right here where it broke through. So once before was resistance, now it's going to be support, and so far it looks like it's going to be a pretty good support area. Okay. Finally, I would like to look at also the one of the strongest, I think the strongest um, indice, and I'm using the ETF. The Qs for this. This follows um, the Nasdaq 100, and again, you see the same theme of the uptrend channel. This is daily chart. the uptrend channel starting back from um, the end of December, middle of the end of December, uh, and it's been pretty much nonstop. The previous um, video update that I did, uh, again, I showed that we're starting to see the same divergence again of uh, of this new line. Uh, every time we got to that new line, this right here, this dotted line, uh, seemed to be a good place to sell. As far as what the technicals technically speaking. Okay, so now we're starting to break, or today we broke this shorter term, this shorter term uptrend line. Okay, let me actually. There you go. So now with this almost like wedge that came to a point that we've gotten to the point of contraction, and we broke down instead of breaking up. That is a little concerning as well. This is the strongest, to me, this is the strongest um, indice. So we may not even see, we may just see it come down to the 34 moving average on the daily. As far as the weekly, that would signify um, probably the 30-day moving average on the weekly. So um, I don't see it even getting anywhere close the 34-day moving average. But again, we'll have to see how next week um, starts with um, the reporting of the quarterly reports. Um, you can see there's a lot of support in this area. Let me go and do this. Um, you can definitely see all the support that you have all the way down here on the 34-day moving average. The only the only way that we get down here is if uh, being the Nasdaq 100 having higher uh, higher beta, meaning they're more volatile um, companies or stocks, they start really pushing this indice down. But I don't see it happening since the Apple's believe 20% of the actual queues, which is quite a bit. So um, it's going to it's going to take a lot to push Apple all the way down to make this indice head down to the 34-day moving average on the weekly. So, but you never know. This is the market is driven by fear and greed. So, well, thank you for listening. Until next time, this is directionalanalysis.com.